Ali was up against the undefeated heavyweight champion George Foreman, the hardest puncher at that time, and he introduced a new strategy, rope-a-dope, where he protected his face and body and withstood these huge blows from Foreman until Foreman wore himself out, and then Ali unexpectedly knocked him out in the 7th round. Well, this stock market this summer has withstood all of these blows: an inverted yield curve, currency changes, global slowdown, increased tariffs, and now recently the Iranian strike on Saudi oil production. And here we are, as you said at the top of the hour, just a fraction away from an all-time high. It is a market that's been very resilient, and we believe poised to make new all-time highs as these trade deals get resolved.
Yeah, I mean, listen, what a fateful day in 1974. So what do you think has been the biggest sort of gut punch or body blow to the markets this summer? Because they've done fairly well. So I guess the idea is that we just haven't launched off because they've been taking the hits from all those things that you mentioned.
Well, I think the inversion of the yield curve, and particularly when it went from the 3-month and 10-year to the 2-year and 10-year, the more traditional inversion, I think that spooked the market. And then also Trump's unexpected increase in tariffs announced in early August, that set off a 3-week sell-off that almost got into correction territory. But look, we've recovered from that. This has been a very resilient market. In fact, it's been that way throughout the past 10-plus years. The fact is, the U.S. economy is still expanding, profits are still growing, and we still live in a Tina world. She's back to the dance, and that is, there is no alternative. Stocks are just much more attractively priced than fixed income.
So you think that all-time highs in the equity markets, if not today, if not Monday, if not next week, but they are coming?
Well, look, our playbook is fairly simple. Trump has jawboned the Fed into lowering interest rates twice now. Perhaps we'll get a third rate cut. So now we have lower interest rates. He will come to some sort of agreement with China on trade. Tariffs will come off the front pages as a major issue going into 2020. Business confidence will pick up, resulting in a pickup of spending. And guess what? You have a GDP that accelerates in an election year. That is a pretty good setup if you want to be reelected, as we believe Trump does.
Okay, so quickly, best part of the market to you right now is what, Hank?
Well, I think the past 2 weeks, Brian, has really demonstrated you need to be diversified. You can't just load up on all of the secular growers and the offensive stocks, the cyclicals. You also have to have exposure to the defensive areas, consumer staples, healthcare, utilities, and you really need to have that balance in order to survive the market.